Alibaba stock might just be one of the most intriguing plays in the global tech world right now. With Bitcoin currently in a downtrend and Ethereum having possibly reached a range high, where should you park your money next? Well, Alibaba stock might just be the place for that, and this video is going to discuss the reasons on why it could turn out to be a very good investment in the short term. Hello and welcome to yet another video from Bloomberg Capital. My name is Patrick, and today we're going to be discussing the Alibaba stock. Currently, we are in a cycle phase where Alibaba stock might just be primed to run even higher, despite it having underperformed for the most part of the last 3 years. Why do you think is that the case? Well, the first reason is that we are monitoring a macro cycle. A hidden cycle that is roughly 20 years long, and most investors don't really take it into account. Now, this cycle tells us that Chinese stocks usually run up very hard towards the end of its turn. So basically, when it turns from bullish to being bearish, Chinese stocks usually perform the best. In the last 2 cycles, Chinese stocks usually performed a 6x move and a 2x move during that phase. Now, how long might that phase be? Well, this is something that we only tell our subscribers, and if you are intrigued by this idea, you should check out our Discord channel down below in the description. It's completely free. You can interact with our community, and if you get more interested, you can also check out our premium offering. What do we think are the tailwinds for this stock play in China? Well, the first one is, of course, the AI leadership. AI is everywhere. Currently in America, it's cooling off, but in China, it didn't really do a whole lot. We have companies like JD and Alibaba as well that are performing the top artificial intelligence play in China. However, their stock price didn't really reflect that. We assume that profits from the Nasdaq are going to carry towards the same place in a rotation, because this is usually what you get in a bull market. A healthy bull market always has rotations within sectors, and here money could flow out of the US into Chinese stocks. If you couldn't get the Nvidia right now, maybe Alibaba stock be the next Nvidia. So that's why it makes a whole lot of sense to consider watching Alibaba very closely. Additionally, Alibaba is also an e-commerce giant. With the AliExpress local marketplace, it has now been gaining lots of traction in the US, and we could perform a 9% year-over-year return. And Alibaba doesn't have anything to lose in America. Unlike Amazon, they have lots of market share to give away potentially to Alibaba. So they might try risky plays that might be rewarded at this tail end of the cycle. Additionally, Alibaba has been not only expanding in the US alone, the year-over-year business growth in other countries has been 27%, with more orders expected to come in, and also selling niche stuff like pickleball gear saw an explosive growth to 197%. So Alibaba is riding the new trend here. And lastly, we also have the cloud computing component. Alibaba and many other Chinese companies are actually maturing businesses right now. In China, you are not supposed to use American tech. Google, Apple, Amazon, all of these giants, due to safety concerns and any other political reasons you could think of that we don't really care about. But this also had a giant benefit for Chinese companies. In a protected environment, they could mature to offer the same businesses as we know from the Americas, and now they are strong enough to expand all over the world, essentially offering competition. We basically are running towards Chinese companies starting to innovate on that technology, using what Google, for instance, has pioneered and trying to improve on it. Microsoft Azure, for instance, is one of those technologies that the Chinese are now trying to make better. And in our opinion, they will likely succeed in that business as well, and offer competition to Microsoft as well. Not only that, but China is also one of the largest economies in the world, and having those services mature in that environment also ensures you stable income and, of course, growth of profits. There is potential growth domestically, but also worldwide. Now that we have discussed the fundamental aspects of BABA, we should take a look at its chart. What you can see is a giant downturn coming down from the November 2020 highs into the lows of 2022. However, as you can see, the stock hasn't really done anything so far, and it's still encompassed in a range. While American stocks have run quite hard, Alibaba has done roughly nothing, basically. So now we are finding ourselves at these highs over here, and what we would need to push higher would be a break above resistance now and a successful retest. If the stock can perform that action, we believe that a new all-time high becomes very likely. So if one would consider Alibaba stock for investment, they only have to watch if price can go above 150 and then form a higher low, which would then propel the stock's likelihood of reaching new all-time highs to the highest likelihood possible in most part of the last 3 years. Currently, we as a company do not expect lower prices in Alibaba anytime soon anymore. We think the train is currently leaving the station, and we are currently looking for buying opportunities in this stock as soon as they arrive. If you would like to discuss that with us and where we are buying the stock, I encourage you to join our Discord and just have a chat with us. I hope you learned something new out of this video. If you did, please like, favorite, and subscribe to our channel. We wish you a good week. Until next time, here at Bloombridge Capital.